All right, welcome in to those of you who decided for a little bit of torture tonight. Tonight's topic is framing the structure. We're going to talk about the legal structure of business, the risk factors that you're attempting to mitigate, and we'll briefly touch on any tax implications. So agenda, we're going to start with introductions. Yes, that means you have to talk as well, because I guarantee you don't want to hear me talk for an hour straight. We'll talk about the various business entity types. What are some of the filing requirements? What are some other considerations? And we'll end with the Q&A, so jot down all your questions, but please, it's much more fun and more interactive if you're asking questions as we go through the class. So please feel free to ask questions along the way. And it actually adds depth and context to whatever we're talking about if we're answering questions along the way. Okay, first up, a couple of housekeeping things. First one is participation. Ask questions, let's engage with each other, let's be interactive. It keeps it interesting. And again, you don't have to hear me ramble on for an hour. Remember, there are no bad questions. If you have a question, odds are someone else has the same question. Being an entrepreneur is hard enough on its own without any sort of negativity or discouragement. So let's be encouraging to one another and ask questions, because I guarantee you are not the only one with that question. With that, I am not an attorney and I am not a CPA. So I want to get that out the way. I will go over what I am, what my background is. I do have a master's in international business, and I've been a corporate controller for about 16 years now. Companies of varying sizes, from about 2 million a year in sales up to 150 million a year in sales. And each of those businesses are different. You need different processes, different systems. And even the business entity types need to be different just because of the risk of the size of the business. So just a little bit about my background. Now, let's switch it over to your background. Let's go around the room real quick and just tell me your name, what type of business either you're in or you're trying to start, what industry you're looking at, just very basic information. Anyone want to volunteer to go first? So each one of your business ideas or actual businesses are very, very different. Different industries, different risks. However, there is actually an inherent risk to each of your businesses, whether it's things that you're actively thinking about or not. There are inherent risks. And so part of the discussion today, not the next week is, I believe, is actually risk and protection. So that's a kind of a deeper dive. We're going to talk about it from a preemptive legal standpoint, not an active risk mitigation standpoint. Any questions so far? Okay. All right, let's dive into business entity types. This is where we are going to spend the majority of our time. Most of these names you have heard before. Whether, how much you know about them is a different discussion, but you've probably heard these terms before. First is a sole proprietorship, which is literally you. Not figuratively, literally, it's you. It's only you. From a filing standpoint, you're either using your personal social security number, or maybe with the IRS, you filed for an EIN so that you're not handing everyone your social security number. But all risk is held by you. All taxation runs through your personal tax return. It is 100% you. Partnership is very similar to sole proprietorship, except you can have more than one owner. The risk is still held completely by the owners. Taxation runs straight through to the ownership. There is no middle. It's just whatever percentage of the partnership your agreement says is what percentage of the taxation you receive and the percentage of the risk that you receive. So now we're going to get into a next step out of risk mitigation. And that's filing for a limited liability company. And an LLC. Everyone knows the term LLC. So in theory, your risk is limited to your investment in the company. So if the company comes under hard times or is brought into a lawsuit or anything, in theory, your risk is limited only to what you have invested in the company. And again, you should not be able to come after personally. There are definitely ways around that. That's a topic. Those deeper dives are a topic for an attorney. An LLP is very similar to an LLC, except an LLP is when you're dealing with, I will call it licensed professionals. So think of like one of the most prominent one is an attorney firm. You cannot have an LLC as a legal firm. You would do an LLP, which provides a lot of the same legal protections as an LLC, but is structured a little different based on state laws. Then the next step up is going to be a corporation, which is a step further of separating yourself from the risk of the business. And there are two types of corporations. There's an S Corp, which the taxation flows through to your personal tax return through a form that's called a K-1 on the business tax return. And then there's a C Corp, which means you have formal, so with both types of corporations, you have stockholders. With an S Corp, the business taxation runs through to the owner's personal taxes. With a C Corp, the corporation pays its own income taxes. I'm gonna pause and ask if there's, I just threw a lot out there. So give you a second if there's any questions.
Well, what would be a reason someone does LLC versus the corps? How does that differentiate?
Okay, we thank you for asking that. We will get into that a bit in a little while. Corporations have much more strict record keeping rules than an LLC does. Don't get me wrong. You need to keep your accounting records straight. You need to keep, but there's additional requirements of a corporation.
Okay.
There's additional oversight to a corporation. That makes it a little bit more difficult to hit those regulatory requirements. Then there is a not-for-profit. In California, not-for-profits are a corporation. And I specifically, I don't call them nonprofit. The difference between a for-profit and a nonprofit or a not-for-profit is in a not-for-profit, the profits stay in the business. They are not paid out to ownership at any point. The profits stay in it. Make no mistake, if you are a nonprofit and you are not profitable, you will cease to exist. So the term nonprofit is a little deceiving. You still have to be profitable. The difference is the profits are not taxed nor are they passed on to the ownership. There are numerous types of nonprofits. I did a class on nonprofits a few months ago. If that is something you have questions about, we can talk about that on the side. But all not-for-profits in California are corporations, and the reason is that you have directors, but the corporation owns itself. You don't necessarily have individual owners of a not-for-profit, not in the same manner as you have ownership of a C Corp or an S Corp for a for-profit business. Others that we are not, well, let me pause there. Any other questions about not-for-profits? Okay. Others that we are not really going to touch on, there's cooperatives, associations, and joint ventures. We are not going to cover those tonight. If you have questions about them, let's talk after, bring it up in the Q&A. That'll be the time to go through them. But we are not really going to touch on those tonight. So just to recap, sole proprietorship and partnership, the risk is held by the owners. LLC and LLP, it adds a legal barrier to where, in theory, your risk is limited to what you have paid into the company. And then corporation and S Corp, there's additional record keeping requirements, but it is a step further in separating your personal assets and your personal risk from the business. I feel like I need to just make a comment real quick. When you're in business, and this is where the waters can get pretty muddy. When you are transacting for a business, a lot of vendors will ask you to sign what's called a personal guarantee. Well, that means you sign a personal guarantee, it doesn't matter what business type you are. If you fail to make that liability payment, whether it's a loan or an accounts payable or anything, if you fail to make that payment, you are personally liable for it. So there's a lot of workarounds that can still pass the risk of a business on to the owner. Okay. Any questions about entity types before we move on to filing requirements? Okay. All right, filing requirements. I kind of split it up into where do you file the different documents. I am not going to get into business licenses and licensing because looks like it's week 4 is about permits, which should cover business licenses. I'll just throw in business licenses. It's a local document that is in the city and or county, both that you are operating in or that you have active customers that you're transacting business in. So just because you're based out of a certain city does not mean you don't need a business license in another city. Not to pick on you, but like construction type services, that's a prime example. Just because you're based out of one city, if you're doing a renovation or you're doing work in a completely different city, you technically need a business license in that other city before you can work and receive revenue. Okay. Let me think, anything else on business licenses? No, I think that's it for business. So just know that business licenses, it is actually more than just the city you're based out of. Okay, local common filings would be a fictitious business name statement. So we're gonna toggle, first off, what is a fictitious business name statement? Can someone tell me what is a fictitious business name statement?
Is that like just what I call my business, what I run it by, like Cover Motion's
That-
business name?
That is correct.
I'm
It
still
is
me?
sort of it's a DBA. It's sort of an artificial name that you are transacting business under. And this is how you file it. This is how you claim that name. You would go down to the county office and fill out a fictitious business name statement. They will do a background check, make sure no one else is using that name.
How does that work if someone else does use that name in a different city, state?
So fictitious business name statements are county specific. I have not run across an example of a cross-county transaction. I'm not going to say it's impossible to, but I have not run across it. Most one of the pieces to the puzzle here, if we go back to business types, you're going to file a fictitious business name statement if you are a sole proprietorship or a partnership and you are not doing business under your own name. So let's say I'm a plumber and my business name is Evan Orgeron Plumbing. I do not need a fictitious business name statement because it's who I am and what I'm doing. But if I decide to call myself, I don't know, Red, White, and Blue Plumbing, then I need to file a fictitious business name statement because I'm doing business under a specific name that is not easily identifiable as to who that person is doing business. Okay, so under a sole proprietorship or partnership, a fictitious business name statement is required if you are using something other than your name and what you're doing. In LLC, LLP, corporation, they can file fictitious business name statements. However, you don't have to for the LLC or LLP name or the corporation name. So my business name is the my business name is the collaborating table. We're an S Corp. I do not also have to file a fictitious business name statement. My business name is already registered with the Secretary of State. It's legally registered. Now, if I were to go and say I'm going to do business as I don't know, I can't even, Blue Consulting. There you go. Then yes, I wouldn't. My corporation would have to file a fictitious business name statement to do business as a different name.
Are those names taken up? Like once an LLC is taken up, that names you cannot take it, right? Like,
So long as it is active, you really cannot register the same name twice. So if there's already Blue Consulting Incorporated out there, you can't have another Blue Consulting. Now, you can technically register Blue Consultants Incorporated. The question is, are you then going to get a cease and desist letter from Blue Consulting because your name is close and you're doing something similar to what they're doing?
and if you get like a local level fictitious name, and then there's like an LLC with that name that started after you,
Okay.
how does that? You're ready to go LLC, and that name's.
So then you would actually have to petition the LLC and prove that you were using that name first. And a court would have to just, you're getting outside. That's a good question. That's a great question. That's an attorney question on exactly how far can you push. You have to prove that. I do know there are certain requirements. You have to prove that people can get confused by the duplicate naming, or it's close enough, or geographically you cross areas. that there's definitely some requirements that you have to prove. Go ahead.
Yeah, so I registered because I have a sole proprietorship.
Mhm.
It's your responsibility if you're gonna go register a name that someone else doesn't have that name already. So you have to go
correct.
there's a certain website you go to and just make sure nobody else has there and it's all yours. But they're not gonna do it for you. Like it says they give you a paper and bulletin points of what my responsibility is, and one of them was I had to assure that nobody else has that name.
Correct. And one of those assurances, let's hop back to this slide, is when you file a fictitious business name statement, you then have to publish it in what is called an adjudicated publication. So what that means is, in theory, that publication has a widespread enough distribution that you're hitting a certain percentage of the population. So that is you going out and telling the world, I or this LLC or this company, this corporation is doing business as this certain name. So you are publishing it, you're putting it out there to the mass public that you're wanting to use that name. And then I believe it has to run for 4 weeks to give people enough time to respond so they can petition back to the county saying, no, they cannot use that name. I'm using that name. Or, if they have some other, what's the word I'm looking for? If they have some other reason why they feel you should not be allowed to use that name. Okay. So if you are a sole proprietorship or a partnership, you do not necessarily have to file with the state. There are some exceptions to that. We are not getting into payroll and employment and EDD filings. We are not getting into certain industries have other, like for the California Department of Tax and Fee Administration, certain industries have other types of requirements. There's the Department of Industrial Relations, there's the California State, contracting board. So certain professions you have to have a license through CSLD. We're not really going to go down that path. That really falls more under the permits discussion. So just because you are a sole proprietorship or a partnership does not mean you have no state filings, and it does not mean you have no federal filings. If you don't want to use your social security number, you still have to file with the IRS for an employer identification number or a tax identification number. If you are going to employ people, you should even as a sole proprietorship or a partnership, if you're going to employ other people, now you have to file with the EDD in California. Now you should file with the IRS to get an employer identification number. So that way when you're handing out W-2s to your employees, you're not giving them your personal social security number, you're giving them your IRS EIN. Okay, so LLCs, LLPs, and corporations, you do actually file paperwork with the Secretary of State in California. They have, over the last several years, they have actually moved that process online. It is really slick. You can do most of it at the Secretary of State website. We will talk about filing methods and kind of, different scenarios based on your scenario. I cannot tell you what is the best filing method. I can just tell you there are three filing methods, and we'll go over them. So when you file with the Secretary of State, if you're an LLC or LLP, you have to file what's called Articles of Organization, which tells the state how you're going to be organized. If you're filing as a corporation, you have to file Articles of Incorporation, which same thing tells the state how you're going to be structured. There is an annual fee that you will pay to the state of California just to be registered as an LLC, LLP, or corporation. And every year you have to file what is called a statement of information, which tells the state if ownership in that entity has changed over the last year. Corporation, someone asked why would someone do what's the difference? Corporation, it does add an extra layer of risk mitigation. However, you have to maintain a corporate binder, which means you have to have your board of directors meeting minutes in it, and you have to have your stock certificates in it, and there's a number of documents. There's a good dozen different documents that go into your corporate binder. And like your meeting minutes, those will get updated every time you have a meeting of ownership or directors. You are required to have shareholder meetings at minimum annually. You can have them every week if you want, but the requirement is at minimum you have to have an annual shareholder meeting. And then your accounting and record keeping requirements are quite a bit more structured. If you get audited as a corporation, they are going to expect you to have your I's dotted, T's crossed, and all your records straight. That last comment, I really need to add on to that. That should be true no matter what your business type is. Record keeping is critical. It is amazing. I mean, as a corporate controller, I can't tell you how many times I've had to go back and find a document that from 3 years ago, a single sheet of paper from 3 years ago. It happens. It's not something you want to happen, but it happens. So record keeping it really is, get yourself on a good system, record keeping system from day one, good filing system. You will thank yourself later. Okay, federal. Step one, federal filing is to file for an employer identification number, tax identification number. And you will file you'll file with the state. And so if you're a LLC, LLP corp or corporation, you'll file with the state, get the approval from the state, then you'll file with the IRS with your approved state of California documents. LLC or LLP, I just put a note in here. If you're a single member LLC or LLP, it'll be considered a disregarded entity. That's an attorney and CPA discussion. I put it in there just so the note is in there. If you are a corporation, in addition to filing for an EIN, you have to file for a C Corp. You'll file Form 8832, which is telling the IRS that you are being taxed as a C Corp, or you will file Form 2553, which tells the IRS you are being taxed as an S Corp. Additional comment. When you are an LLC, LLP, LLC or LLP, the LLC and LLP are a state level designation, not a federal level designation. So if you are an LLC or LLP, you still have to tell the IRS if you are electing to be taxed as a sole proprietorship, a partnership, a S Corp, or a C Corp. So just because you're an LLC, you still have, actually I don't think sole proprietorship is I don't remember. I'd have to pull up a W-9. But definitely you have to tell the IRS if you want to be taxed as an S Corp, C Corp, and there's a third option. It might be partnership, might be the third option. So just because you're an LLC or LLP does not mean you can ignore the other forms. They still have to be filed. You still have to tell the IRS how you want to be taxed. And if you don't tell them how you want to be taxed, so long as you're using it, you need to keep it active. You can't actually, you don't ever want to get yourself into a position where it might trigger an audit. And any anomalies like that could trigger an audit. So it really is, I don't even think it costs anything to keep an EIN active. You just use it and you report on it, and you report on it every year.
Zeros every time, or how does that work?
I mean, if you have no business income or expenditures, then yes, that's correct.
Yeah, because when we called the IRS, they said no for you at the moment because you don't have any employees.
Okay.
The Jones is at Schedule C should
Got
be
it.
enough.
So you're not even, okay, I see what you're saying. Well, I mean, if the IRS told you to not, then don't. I mean, I guess that does make
But
sense.
it's not like the EIN expires or anything like that, is it?
I've never heard of it expiring. I understand what you're saying, because if you're not filing 940s and 941s, then I get it. Why is the number floating out there? So, yeah, I would just say take the IRS's advice, or use a tax attorney or a CPA and go that route.
Thank you.
Yep. Any other questions? Okay. All right. We're going to move on to methods for filing. At the end of the day, there are 3 methods for filing documents with county, state, and feds. The first is you do it yourself. It is by far the least expensive method. However, be cautious, because if you are not well versed in what articles of organization are, and how to form an operating agreement, and what needs to be in all of these documents you have to submit, leaving information out could be a major hindrance in the future. So it is possible to self-file. However, do so cautiously. Make sure you do a lot of research, and you know exactly what you're filing, when it needs to be filed, and you're thorough. And the self-file, that goes for, again, that's county, state, and IRS. You can file it all yourself. You can use an online service. I don't endorse LegalZoom. It's just one that most people have heard of. So a service similar to that, where you will pay that service, who generally has either staff attorneys or so someone there that is well versed in the process, and will make sure all the I's are dotted and T's are crossed for you, and file the documents that way. And then you have very formal, which is you hire an attorney. A business attorney drafts all of the documents, files them for you. That is by far going to be the most thorough, also the most expensive. But if you are in an extremely high risk industry, it is probably, it might be worth the extra cost of having an attorney draft the documents. They are going to know how to protect you from certain lawsuits, how to structure you in the appropriate way to mitigate your personal risk the best. One of the questions that I normally get on this slide, and I haven't heard it yet, is well, how much does that cost? So self-filing, if I remember right, a fictitious business name, it's not much. It's like 25 or 50 bucks. And then you have to pay to have it posted in an adjudicated publication. That's going to actually, I think that's now somewhere between $100 and $200, depending on which publication you go with. State of California, LLCs and S corps have a minimum annual tax of $800 plus your statement of information filing of $25. So your minimum annual will be $825, plus the initial filing fee of about, I don't remember, it's like 25, 30 bucks. If you self-file anything with the Secretary of State, one of the very last pages is, do you want to pay $5 for a certified copy of this filing? That answer is always yes. Always yes. I cannot emphasize that enough. If you open up a business and you want to go open up a bank account for the business, you need a certified copy of your Secretary of State filing. If you want to do a lot of different things, take out loans for the business, just a lot of different things, you will end up needing those certified copies. So just pay the $5 up front, get the copy. It's a lot cheaper than paying for it later on down the road. Okay, online service. I've seen online services anywhere from $500 to, I don't know, about $2,500. That's just what I've seen. I'm not saying there aren't cheaper ones. I'm not saying there aren't more expensive ones. That's just kind of the common range. That does not include the $825 that you're gonna have to pay to the state of California anyway. So be aware you're still gonna have to pay the state of California even if someone else files it for you. Then with the attorney, I've seen those anywhere from about $2,000, and I'll just say and up. I think the most expensive one I've seen is about $5,000. If you're trying to start up a business that will eventually go for try and be publicly traded, it's probably going to cost you even more than that. It just depends on what needs to be in your formation documents. So same thing though, those fees are not going to include what you have to pay to the state of California every year. So rough ballpark, don't hold me to it, don't nail me to the wall on those, but that should be pretty accurate ranges to work with. Any other questions on methods for filing? Okay. A few other considerations while you're trying to determine what business type you want to go with are tax planning. Do you want your business taxes running through you personally? One of the items that I didn't really talk about earlier is different. An LLC, forgive me, I don't remember right off the top of my head. LLC and LLPs do have a maximum number of owners. Same thing with S corps, they have a maximum number of owners. C corps, especially if you're going to be publicly traded, you could end up with tens of thousands of owners. So that number of owners definitely factors into the equation. That's really more of a do the research on your own, talk to an attorney type of question. But tax planning, that is, work with a CPA. Figure out what is the best case scenario for you and your business, depending on the business type. Succession planning. How badly do you want the business to outlive you? A sole proprietorship goes away when you go away. Not to be morbid. It's just the way it is. C corps will survive the ownership. Your stock can be bought back by the company, can be transferred to someone through a will. There's a lot of options on what happens with your ownership of a corporation. So that succession planning is something that you'll want to work with, some type of legal service or attorney on. And then lastly, no one wants to think about it, but exit strategies. The reality is 90-something% of businesses fail within the first 5 years. That does not say anything about anyone in this room individually, independently. It's just a fact. So have an exit strategy. Think ahead of time. If things don't go how you want them to go, how are you going to liquidate your assets? How are you going to exit the business? Including, you can't just say, I'm not going to be in business anymore. With the state of California and with the IRS, you have to file final returns with both. You have to file documents to close out the entities with both the state of California, which could be multiple entities. It's the Secretary of State. You could have the EDD, the CDTFA, the DIR, the CSLB, and it just keeps going on. The same thing with federal, depending on what you're in. The IRS is an obvious one, but if you have EPA filings, if you have SEC filings, if you have, various things, there's multiple steps to exiting or closing a business. A lot more than anyone ever thinks about from the get-go. We want to be excited. We want to be, encouraged and go pound the streets and make those sales. But there is that reality. If you're a corporation, you can choose whether to issue shares to your children or not, or whether to transfer some of your own shares to your children or not. Obviously, there's legal and tax consequences to doing so. So consult an attorney and a CPA in doing that. If you are a sole proprietorship, and you're bringing your kids in, all you're really doing is changing it to a partnership. So it'll change how you're filing your taxes and who may or may not be legally liable if something doesn't pan out, for the business, or if, sorry to pick on construction, but if a project goes south or an owner isn't happy and they file a lawsuit against you, who's getting wrapped in to that action. So you can add or remove businesses with add or remove owners with any business type. Just how much work needs to be done to add or remove owners is what changes based on how you're filed. So if you're not making money yet, first thing I'm going to encourage you to do is figure out how to make some money. That's it. If you are in a high-risk industry, you probably don't want to do that as a sole proprietor. There are certain industries that seem to be a little bit more prone to lawsuits. There are certain industries that are more prone to accidents in industries. There's certain, you're gonna have to think about your own industry and how much risk are you willing to personally take on until you decide you want to file. So remember, in California, like even just an LLC, there is still a minimum tax every year of $800. So whether you sold anything or not, whether you are profitable or not, you could have lost everything. You still have to pay the minimum tax to the state of California. So that those are, you just have to think about, do you want to pay $800 a year? Is it worth paying the $800 a year? If you are in business, but you may not necessarily be profitable yet. It's about risk mitigation. Good question. Any other questions?
So who should we have on our team right in the start? You're saying like a CPA to do that, all that stuff, or like is that an attorney?
So you might be able to find a CPA that'll file all the paperwork for you.
Yeah.
Usually they will file certain documents, but not all of it. A business attorney will usually file anything.
A business attorney?
Yeah. And I mean, I'm sure any attorney probably could file it, but you know, you get a accident on the highway injury attorney. It's not something that they're doing day in and day out. So, you know, and I'm a realist, and attorneys are like most other industries. They're databases of forms and backup documents and things that they can pay to dive into those kind of templated form documents. So again, I'm sure any attorney can do it. It's just who specializes in that segment of law versus others.
Okay. Thank you.
I hope an attorney doesn't come after me for saying that. So, any other questions? I'm happy to answer. I mean, really, at this point, any business questions at all. It doesn't, I mean, I don't know if you want to shut that down, but any business questions at all, happy to help.
I'm kind of stuck on one for earlier. So we know of a company that just sprouted up with our name, and they're in the App Store with the app making AI cover art.
Mm-hmm.
We specialize in cover art, handmade, human-made, and we've been doing that for years. I've been doing it for years, and I'm like, how do I combat that? And it sounds like if they're in the App Store, they might be one of these bigger entities.
Yeah. So you first off, do your legwork. What type of business are you? Were you filed? Did you publish anything? You know, how much were you out there before they came around? Who was around first? So you also need to do the research on their company. What type of business entity are they? How long have they been around? Are they actually in the same industry, you know, providing the same service or not? Those are the base questions you have to answer. Then, you know, if it is plausible to be in a situation where you just started using a business name, it was never filed anywhere, they did file the business name, well, unfortunately, there's probably not much you'll be able to do about that.
Okay.
You might have, again, this isn't a business attorney question. I know it may not be a complete loss because there are factors of how long were you using the name. Will consumers be confused by duplicate names? Well, you know, that there's a lot of factors that go into it.
Yeah.